Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, this is a 5-minute chart of the S&P 500 E-mini futures, and what I'm looking at is 63.25. The uptrend for the last couple of years has been built on floors, a series of floors over time, and a floor is essentially where you see a level. In this case, we're talking about 63.25. It was a low and a low, then it got retested in Globex here and here. So basically the task for the bears this morning will be to break through 63.25. If the history of this uptrend tells us anything, that's going to be very difficult to do. And if 63.25 establishes itself as a floor, then we would be looking at new highs fairly quickly. If not today, then tomorrow. As we get into the remainder of the week, it's you got ECB tomorrow, and then the jobs report is on Friday. So there's plenty of catalyst left for both sides. Now out on the daily, you're also seeing what we've seen so many times during the course of this uptrend, which is new highs. We pulled back 1%. And yes, we're still overbought on a lot of metrics, but during the course of us being overbought, we've pulled back 1% and we're still overbought. So how overbought are we really? We did work off from 2075 quarter down to 2048. We were not able to even challenge the middle band and do a full-blown test. Just brushed it and did a higher low versus the prior day low. The 9-day had a chance to be resistance. That has fallen by the wayside. And what you're now seeing is the 9-day blue line here trying to go support. So the bears are going to have to try to eviscerate a lot of the ghosts that have plagued them and haunted them for the last couple of years if they want to keep 2075 quarter as the high. The bands are getting tighter. The middle band is support at this point. You're creating a floor at 63.25, and you're a mere 10 handles off of the highs. I cannot think of a time in the course of this setup during this uptrend, so since December of 2012, where we have not gone on to make new highs fairly quickly. So for my part, I've got a long down 61.75. We had a nice test of our proprietary upper level yesterday, so the room is long 61.75. I've got a free ride stop in there at 62. I've already taken some, and I'm just letting it work. If 63.25 is truly a floor, then my runner should have plenty of opportunity to go ahead and run higher to new highs. But like I said, a lot of catalysts. There's a lot to work through. If we do get a dip this morning that holds, then that will also get us back into the habit of moving higher. So like I said, the bears have a lot to overcome. They pretty much have to break and close below the middle band to get anything significant going. Otherwise, we start this steady move up into the jobs report on Friday morning. So, and the bears had a chance. We pulled back from 2075. We did a 1% pullback. They could have pushed it over the edge, and they couldn't get it done. So once again, the bears have done it to themselves, and they're going to have to, either overcome it, or they're going to have to suffer the consequences of letting the dip buyers have their way, all day, every day. All right, that's all I've got. Everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.